Well, food delivery app Deliveroo's shares have plummeted on its stock market debut after a number of major UK investors expressed concerns about its gig economy worker model. For more though, let's bring in Jessica Gracie, who is a PhD candidate from the University of York and specialises in the legal implications of gig workers. Good morning to you, Jess.
Hi Holly, how are you?
Really good. Great to have your company again on Ticker. Talk to us about what's happened here and why.
Yeah, of course. So, what it looks like is that, yesterday, so Deliveroo, they had their debut on the London stock market. And this was actually one of the most anticipated listings in quite a while. And it did come after the Chancellor of the Exchequer, Rishi Sunak, announced some new rules making these listings much easier for companies in London. And its initial listing was between 390 and 460 pence per share, which would actually give the company a value as high as £8.8 billion. But according to Deliveroo, due to some volatile market conditions, this share price had to be scaled back, which gave them this lower valuation of around £7.6 billion. But actually yesterday, within about 20 minutes of its debut, Deliveroo saw a huge share price drop of around 30%, which wiped about £2.28 billion off its valuation. So obviously, this is quite concerning for them as a company.
Massively. I mean, the company we know that was initially hoping for higher, but fund managers won't buy the shares. But why?
Well, since Deliveroo announced that it was going to be debuting on the stock market, a number of big investors, including Aviva and BMO Global, stated that they actually wouldn't be investing. And they've cited like a variety of reasons for this. The first was that Will Shue, who's the company's founder, would, in this new arrangement, have more than a 50% of shareholding voter rights. So that was a little concerning for some. But there also have been some reports over the way in which the company treats its workers, which I can kind of come onto in a bit more detail later on. But the main reason, I think, was following this decision at the Supreme Court in the Uber case and Uber's subsequent decision to reclassify its drivers as workers could potentially mean that this, gig economy, self-employed business model isn't particularly sustainable.
I mean, just going into that a little bit further, we know that there's reports that found that 1 in 3 Deliveroo riders actually earned less than the minimum wage. Can you just elaborate on that for us?
Yeah, of course. So the Bureau of Investigative Journalism actually conducted an analysis of thousands of pay slips from about 300 Deliveroo riders. And as you've rightly said, around 1 in 3 drivers actually earn below the minimum wage, which currently stands around £8.72 per hour. But what they also found was that one particular driver in Yorkshire, who had logged about 180 hours of work, was paid approximately £2 an hour for that work. So, that's really highlighting that these claims that Deliveroo make that riders earn at least £10 an hour clearly isn't the case for so many of them. But this is obviously allowed because Deliveroo don't need to guarantee minimum wage to their riders because they class them as self-employed.
Exactly, and it's very similar to the situation we're seeing unfold with Uber, where they've had to classify or reclassify their workers because of the similar situations. Is this the beginning of the end for the gig economy, do you think?
Possibly the gig economy as we know it, I should rephrase. I think what's really clear is that, this Uber decision is already having a really significant impact in the wider gig economy. And it's very clear that investors are anxious about the possibility of these big class actions, where if companies were found to have misclassified their workers, they'll be forced to backdate things like holiday pay, sick pay, minimum wage, amongst a range of other things, which is going to be a huge cost to the business. But I think really it doesn't need to be the end of flexible working, because I think, flexible working is the future, but it does need to be the end of the exploitation that comes with, that flexible working, as we've seen with that big Deliveroo report on pay. So I think what's important is that, to direct the conversations going forward, that we're looking to bring this work into the 21st century and, providing an offer that works for everybody involved.
Absolutely. I think we haven't heard the end of this yet with these kind of industries as well. So thank you so much for joining us, Jess. It's always a pleasure to have you on and to get your insight on these kind of issues that we're facing. So thank you so much.
Thanks so much for having me.
Jessica Gracie there from the University of York.